Oh yeah.
Oh yeah.
Are you driving a fast car right there?
I am riding dirty.
Oh, you're riding dirty.
Yeah, I actually listened to Fast Car this morning though.
Did you? Tracy Chapman. That's a great song.
It is.
That'll be our theme song
for
this show in particular. Hey everybody, explorers, welcome back to the Mastery of Money podcast and the YouTube channel if you're joining us on YouTube. We are today going to talk about how to finance a car. Got some questions about this on the mailbag, and specifically people were asking around, should I buy my car based on payments? Should I take cash? Should I take a lower interest rate? We're going to talk about some tips and tricks of the trade that will keep you from overspending on that ride.
Yeah.
Cool?
Yep. And they're very, very good questions. So, one of the things they just want to dive right into this, really knowing, in considering how much, or in purchasing your car is how much car you can actually afford. Really looking at what the monthly payments are. Now, this can be a little tricky because anytime I drive by a car dealership or go into one, I had to get my car fixed, and I wasn't even buying a car, but I was like, they're going to sell me something, like I'm going to get gypped somewhere. One of the things is like, you really got to know your options and you really got to know the numbers when you're making this purchase, because these salesmen are definitely trained at what they do. And Adam's about to share one of the things that, a question that they ask that literally, regardless of what you say, they can, they can twist and turn.
Yeah, so, can be manipulated. Yeah, for sure. So the idea of going in and buying a car for some is like panic inducing because of the negotiation process that goes into buying. And one of the ways to do that, very simply, is to go get pre-approved for a loan ahead of time. And the best way to do that is typically to visit either your local bank or a credit union who will approve you for a loan. And when you find the car, you just call them, tell them what it is, and they'll drop that money in your account. You can write a check for the car and then begin making payments to the credit union. Now, typically you're gonna have a little bit lower interest rate on a deal like that than if you go through the dealership. And here's the secret of the dealership. A dealer or a car salesman is going to come up to you and say, so you like this Maserati? And I'm just curious, what were you hoping for payments? Or what's a comfortable payment for you?
$385 a month.
Oh, perfect. That's great. I think we can do that for you, Mr. Durr.
Really? For
Absolutely.
a Maserati?
Oh, yeah. Oh, yeah.
Wow.
So the way they do that, it's called paymenting. And we can payment someone by asking them what their ideal payment is. Let's say it's somewhere between $375 and $400. And what we're going to do is we're going to extend the term of the loan out as long as we need to. So while the car may be, $20,000, I can either get your payment, down to whatever number you want by extending it out 5 years, 6 years, 7 years. They now have 8, 9, and 10-year car loans.
Wow.
So can you imagine buying a car and driving it, and the average car is driven, I think, somewhere between 12 and 15,000 miles a year. So if you have a 10-year note, you will have 150,000 miles on your car before you've paid the thing off, driven all the equity out of it, and probably now you're in the expensive fix mode, where now you have a car payment and you have expenses on the back end.
Yeah. So
don't get paymented. Know what you want to spend for a car. Don't fall prey to the what would you like your payments to be discussion.
Very, very great advice.
Thank you.
Yeah.
I thought so.
And there was a point where you said it literally driven out the equity, like no pun intended.
No pun intended.
So one of the questions that I also know that we get is really the different options, right? And sometimes for me, every time I'm presented options, I'm like, okay, let's do the due diligence here. And a lot of times when you're financing a car, purchasing a car, they'll offer you a cash back option or a reduced interest rate option.
Yes.
Right. So the typical car loan payment is about 4 to 6%, right?
Yep.
Ish, but probably more on the 4 side.
Yeah.
And so with a lower interest rate, it can be anywhere between,
It could be 0, and it could be 1.99. It could be, in some cases, depending on your credit, it could be 7 or 12, or I've seen car loans as high as 18%.
Oh, wow.
Things like buy here, pay here car lots.
Wow. Okay. So that's one side of it, and the other side is the cash back. So what's the highest that you've seen, or what's the average that you find?
Oh gosh, so an average on a cash back deal is probably in the 4 to 7 range for good credit.
Okay, $4,000 to $7,000.
4%, 4% to 7%.
Oh, the cash back. Oh, gotcha. Oh, for the interest rate.
Yeah.
Yes. Okay. So actually, we were talking prior to this episode, and I needed to get that cleared up for myself. So when you get cash back, there's a specific cash back you get amount.
Yep.
But that also means that your interest rate will be higher.
Correct.
So the two options are you can get physical money and have a higher interest rate on the car payment, 4 to 7.
Yep.
Or you could get no cash and a reduced payment can be anywhere between 0 and 3, 4, etc.
Yep.
Yeah.
Exactly. So we did a quick example to give you a very concrete, tangible representation of this. So if a vehicle price is $25,000 and you put $5,000 down, you came to the table with some money, maybe it was a trade-in as an example, and the cashback interest is 5%. So they're going to give you $1,000, let's say cash at the closing, or when you sign on the dotted line, they're going to give you $1,000 cash back, but the interest rate is 5%. Or you have the option of a reduced interest rate of 2.9% over the life of the loan. So the difference in the two scenarios, your cash back monthly amount is $461 a month, and your low interest rate payment is $442 a month for a difference of $19. Okay? So that means that the low interest rate option will make your payment $901 less over the life of the loan, meaning the cashback option would be a good option for you in that case. Now, if it was 5% cashback amount and it was 0.9% on a reduced interest rate, then the difference in your payment is $1,738, meaning that the low interest rate would actually be a better deal for you over time. So it's really critical that you do the math, and we will link to a calculator down below that will take you to a comparison and allow you to actually make an informed decision on cashback versus interest rate.
Yep. Awesome.
Is good.
Good stuff.
Last thing. Do it.
Is the trade-in. So I'm going to pretend to be the person that's trading in, and you'll be the expert.
Okay, that sounds great.
So I've got a car that I'm financing, but I still owe money on it, and what do I do?
Oh, cool. We can totally help you with that, Mr. Durr.
Okay.
What would you like your payment to be?
Oh, God. Not this again.
So what we do in this case is, if you have a car that you still owe money on and you are looking to trade that in on a new vehicle, what the dealership will generally do is they will roll your payoff of that other loan into the new loan. Now, the key is, generally speaking, you need to make sure that the car either that you have or that you're buying has equity available. So what I mean by that is, if you are turning in a $5,000 car, but you owe $7,000 on it, then you're technically upside down on your car. You owe more than it's worth. When you are upside down in your car, they will still roll that loan into the next loan, but you may have a little bit higher interest rate because there's additional risk for them. They may just do it flat out, but at that point, it's really important that you make additional payments to your vehicle. Otherwise, every single time you turn in that car, and every subsequent car after that, the loan balance just keeps rolling higher and higher and higher. So this is where most people get stuck in their vehicles, is they're upside down and they just keep rolling negative equity into the next loan over and over again.
Gotcha.
Make sense?
Yep. So if you need to trade in, make sure that one, you're not upside down, but if you are, you got to be making that extra payments to get out from under.
That's exactly right.
Got it.
You nailed it.
Nailed it.
Yay. Good.
Awesome. Anything else around
The
this?
very last thing around buying a car and financing a car that's rather important is this. If you go to a car dealership and you see the F&I manager, which is the financing manager, what they're going to do is they're going to take a loan application from you. They're going to type that into their system and then hit submit, and it goes out to maybe 7 to 10 lenders that they work with. Every one of those lenders is going to do a credit pull, every single one of them. And when they pull your credit, the more times your credit is pulled, particularly on a hard pull like this, where you're looking to get credit, your credit score will start to go down. So you've got to be really careful about a dealership that you go to that's pulling your credit over and over and over again. You can ask them, I'd only like to submit it to 3 lenders or 2 lenders. Or you can come in and say, I've already gotten my financing lined up, so I don't need to see your F&I manager to get financing done.
Yeah.
Last but not least, the F&I person will also sell you gap insurance, and they'll try and sell you a car warranty. But those warranties and the gap insurance can actually be purchased through your bank or credit union. And they're significantly cheaper because there's a pretty healthy markup at the dealership. So make sure that you're asking at your financial institution, do they offer gap insurance and any extended warranties if that's something you're interested in.
Great. Really great stuff. Again, thanks for the question. We love answering questions at questions@masteryofmoney.com. Continue to send them in, and especially with cars, there's a lot of different facets and a lot of different, just different intricacies to it. So if you do have questions, please let Adam and I know. I'd be more than happy to engage with you. Again, like, comment, and subscribe to this channel. We really enjoy spending time sharing these tasty morsels of financial literacy.
Indeed. Happy trails on the path to mastery. Peace out.